Good afternoon, everybody. Paul here, and welcome to the ActivTrades Monday Market Matters webinar for 15th of January. And here we are today to talk about how to trade star formations. A very simple yet elegant trading setup that hopefully you can take on board and utilize in your own trading. It's great to be here as always. Just wanted to check, ladies and gentlemen, that those of you here joining us today in the room, just wanted to check that you can see the slides and more importantly, you can actually hear my voice here as well. If you could just confirm that in the chat box, I'd really appreciate it. We just want to make sure that the tech is working properly for us before we go too far into our session today. So what are we going to talk about today, as always? Well, our most important educational element today is all about trading star formations, morning stars and evening star formations. As I said, quite a simple but clear setup that new traders can utilize as part of their trading repertoire. It would be interesting to know from those of you joining us today for our session, how many of you use star formations in your own trading presently, or how many of you actually are at least aware of them and what they represent. As part of that, we'll talk about where do we find them, and we'll talk about how best to trade star formations. And then, as always, we'll switch across to the live market so we're able to see A, the opening of the US session, and B, whether there's just any particular star formations that on live markets that we can take a look at, as I appreciate it always helps after the education element to be able to see how that applies in real markets. For those of you who don't know me, my name is Paul, traded for many years, traded for funds, traded for clients. Primarily, I look to focus on trading FX indices and commodities. I'm a trend trader for my longer term trading and a reversal trader for shorter intraday trading. A part of that will become available as we apply what we talk about in today's session. So, we carry on our Monday Market Matters webinar, which is all about setting up ourselves for the right start in preparation for the opening of the US markets in about 24 minutes time. So every Monday at 2 o'clock London time, we will be covering just looking at the news ahead for the coming week. Mostly looking at an educational piece that can build on your trading knowledge that you can take away and utilize elsewhere. Looking at the tools that are available to you as an ActivTrade client in terms of the platforms and tools. And then, as I say, having a little look at the markets, look at the live markets as we start the first US session of the week. So there's always plenty for us to talk about. And let's start by having a quick look at the news ahead. So, what we had last week, if you remember, for those of you who joined us, is that, we were waiting for the US CPI data last Thursday to give us a little bit of clarity on sort of direction and trajectory. I think it's probably fair to say that we have not yet received that, and that kind of news, even though it was a little bit hotter than expected, it hasn't given us the sort of direction or trajectory that we were expecting, and that is clear when we look at some of the FX and indexes and even some of the stocks to look at the kind of amount of doji candles which have been printed, which is a representation of indecision. So then we look at to see, well, what, if any, news this week could help sort of shift the needle or, or kind of sort of change the narrative at the moment. We have a bit of US news data, and you can see there on Wednesday, we've got US retail sales. Thursday, we've got the US building permits, and also we have University of Michigan Consumer Sentiment Index and existing home sales on Friday. But I suppose closer to home, in terms of relevant news, we have quite a bit of news coming out for the UK this week. We've seen a little bit of strength in the pound sterling over the course of 2024 so far, and the question is that just a mere blip, or is that a sign of something to come? And I think we'll have a better picture and understanding of that by the end of this week. Tomorrow we've got UK employment figures. We also have Mr. Bailey speaking tomorrow afternoon. We have got UK CPI on Wednesday, and on Friday we have UK retail sales. So I think by the end of this week, after all those kind of that data is released, we'll have a better understanding of the state of the UK economy, and of course with that the sort of likely direction of travel for both sterling and the perhaps the UK FTSE as well. So there is lots of data coming out there. Some we have Canadian data, CPI tomorrow afternoon, which will be of relevance and interest always. And as I say every week to traders, it's if you're a new trader, if you're just starting out on your journey, I would not expect you to be able to analyze the economic data that we come out, but it is important to know when that data is coming out. And there is a economic calendar on the ActivTrades website, which I commend you to utilize to make sure you know for each week, for each day, for each session, what are the main elements of news coming out for that, because it can be unbelievably important. You will also find that the ActivTrades team of analysts, they provide some really good, useful missives about both the global economy and sometimes individual instruments. So make sure that you're signed up to receive those, as they can be enormously useful and give you some insight into specific instruments. So having looked at the news, let's have a little chat about our main element for today, which is really all been about how to trade star formations. As I said, it'd be interesting to know what, if any, experience those of you joining us today have in terms of trading star formations, or even being aware of them, or even working them. But as the slide says, we've covered quite a few instances of price action and candlestick patterns on our Monday Market Matters webinars. And so today we're going to focus on morning and evening star patterns. As it says, they are simple yet important patterns in trading and chart analysis, and they can be an ideal reversal pattern for new traders to learn. So in today's session, we'll discuss the different star patterns, how traders can engage with this pattern in their own trading endeavors. And the really good thing about star formations is that they are both time frame and instrument agnostic. And what I mean by that is that they will appear across all instruments, in all asset classes, and also across all time frames. Now, I would say that the higher the time frame, the more validity those patterns have. But then that really is pretty much like any kind of price action or candlestick pattern. You'll find that the higher the time frame, the more validity they have. But that's not to take away from the fact that they are prevalent across all time frames and all instruments. So, as I said, we've talked quite a lot about price action patterns, candlestick patterns, and it's just to remind you that sometimes people lose track of the fact that by their very nature, candlesticks are a reversal pattern. And, they are very often utilized by myself and other traders, along with things like rejection candles or pin bars, engulfing candles, and key reversal candles. And so, I would view morning and evening star patterns as part of those kind of similar price action reversal patterns. So I think it's a really useful skill for new traders to have, to be able to read price action and to identify just several of the strong major reversal patterns. So star patterns, key reversal candles, engulfing candles, pin bars. I think that is a great starting point for traders to be able to build out a price action trading plan that allows them to engage with markets from a solid basis, from a solid standpoint. And so morning and evening star patterns are part of that overall group. So let's have a little look at the morning star pattern. This pattern is found at the end of a down move, at the end of a downtrend, preferably at a support zone. Remember, you hear me talk about it all the time. What we like to see are a confluence of events. This is where 2, 3, 4 things come together at one time and place in effort to give us an indication of a higher probability of price moving in one direction over another. So when we're looking at a morning star pattern, let's just bring up the old drawing tool. What we can expect is that the first candlestick should be a large and bearish candlestick, okay? As I said, as part of a downtrend, running into a level of support. The second candle, candle 2, is usually either a very well, it should always be a small bodied candle. Sometimes it'll be a rejection candle, or sometimes it might be a doji candle, a candle of indecision. And then the third candle is a large bullish candle, denoting that the bulls have taken over the market. And that's the underlying theme, okay? The underlying narrative that this pattern has been created because what we've seen is that, having had the bears in control, for whatever reason, the bulls have stepped in and wrestled control of the market. And so the higher probability is that the next move, the next trend is to the upside. And we're looking at that as a way and a means to position ourselves accordingly for the future trend direction. So that is a morning star pattern. As what I would provide, okay, as a little bit of a let's say as a little bit of an experienced trader's tip for you to sort of take on board. I am always much happier when the third candle is not only very bullish, but it actually looks to sort of at least trade and close above kind of 50% of the first candle. When I see that, that is when I'm actually happier. That doesn't have to do that. It's not a essential rule, but I've just found through experience that the stronger that bullish candle is, okay, candle 3 on a morning star, the better, the higher probability of success. So we might just want to sort of take that little note on board, just so you understand some of the sort of the speak behind it. It is known as the morning star pattern because it's considered a sign of hope in a bleak market downtrend. All right. What that means is if you want to remember, a way to remember it is that basically morning star is, in fact, it's morning because that's when the sun is rising. Okay, the sun is rising. That's why we're expecting a little bit of daylight. Okay, and we're expecting a higher probability of a bullish move going forward, and so that's why it's known as a morning star. Now, in perfect examples, the stars have no overlap with the longer bodies, okay, as the market should gap both on the open and the close. However, okay, that tends to be more for what we see in equities and commodities, where we have a very clearly defined open and close time of the trading exchanges. Due to the nature of the FX markets being 24/5, 24/6, depending upon your view, it is very rare that candle 2 will effectively gap away, form as a gap away from both candle 1 and candle 3. I'm not saying that it couldn't do that. It could, but the probability of that is very, very low. And so it's a case of working with what we have at the what the market prints for us. And so within FX markets, which is where the majority of my own trading gets done, as I said, it's very, very rare that you will see candle 2 gap away from candle 1 and candle 3. It can happen, but it is exceedingly rare. But it will happen in equities and commodities markets quite regularly. So, of course, the important thing is, we want to know is, well, how do we enter? All right, how do we enter? Well, at the simplest way to trade it is when candle 3 completes, which on a morning star is the bullish candle, you can buy that market. Okay, as the most simple, basic, standard way to enter is that once candle 3 completes, okay, then basically you can buy the market. And in this particular case, you can see that the market has been in a significant downtrend, and then we get a strong bearish candle, sort of hanging man candle there, okay, sort of reversal candle, and then that's completed there, as you can see, with the really candle 3, which is a strong bullish candle, which has closed very much way above 50% of candle 1. Okay, that's giving us a real indication of the strength there. So once that candle closes, you're able to buy the market. Your stop loss, okay, we never trade without a stop loss. We make sure we position size accordingly. That goes beneath the low of candle 2. Now, in this particular case, candle 1 actually is a little bit lower, so it should be beneath the low of candle 1. But the whole idea is to ensure that it is beneath the low of the overall pattern. And as a general rule, ideally, we should be able to achieve twice the actual trade risk. And by trade risk, I mean that is, the range, okay, the trade risk between where we enter and where our stop loss is, okay, and that range there, let's just say particularly that was 50, let's just say that was 50 pips, okay, hypothetically. Well, then, I should be able to at least target twice that, okay, 100 pips in that particular hypothetical example. So that's what we're looking for in terms of how do we enter our Morningstar position. So hopefully that just gives you just a little bit of clarity on how you identify it, where you get in, where your stop loss is, and where you're looking for as means of a target. So on the flip side of a Morningstar, we have the evening star pattern. And as you may not be surprised to hear that the evening star pattern is the exact opposite of the morning star pattern. And this pattern is generally found at the end of an up move at a resistance area. Remember, we're always looking for that confluence of events, okay? We're always looking for 2, 3, 4 things to come together at one time and place that give us a higher indication of where the likely direction is likely to be after the candles have closed. So for an evening star pattern, as I said, it's the complete opposite. So first candlestick here is large and bullish. We've been in an uptrend. Price here prints a large bullish candle, and so at that particular time, okay, that just might be seen as a bullish candle. We may not necessarily recognize or be aware that an evening star formation is actually is being built. But we can see when we're at kind of coming towards a level of resistance, and then when we get the second candle here, the second candle should be a small bodied candle as the star, indicating indecision. Remember what we said about morning stars. They are a reversal pattern. So is an evening star pattern. Okay, it's a reversal pattern. And what we're looking for is a case of having the bulls in control. We now have had the bears step in and start to wrestle control of the market, and that's why the third candle should be a strong bearish candle, indicating that the bears have taken over. And as I said on Morningstars, just a little tip is that I like to have a very strong bearish candle, and if it is also closed at least beneath, okay, beyond the 50% of the sort of candle 1, well, then that gives me an even stronger signal. Okay, so that's just come from experience there, and maybe we'll have a little look at opportunities from that later on as we switch across to some of the live charts. So a bit like the morning star, the evening star, okay, in perfect examples, the star will have no overlap with the longer bodied candles as the market gaps both on the open and the close. And it's the same as we're saying for the morning star pattern. You are more likely to see that happen in equities markets and commodities markets where there are very clearly delineated open and close times for those trading exchanges. In the FX markets, okay, that is unlikely, and also in index markets where you're trading the electronic contract, where it tends to these days to run 24 hours, you are very unlikely to see candle 2, the star, completely gap away from candles 1 and 3. It can do, but it is exceptionally rare. More often it looks like this, where there is overlap between the candles. And that's absolutely fine. That's absolutely fine. It is giving us the correct and right view of the market, namely that, in an evening star, the bears have stepped in, they've wrestled control, and that the highest probability of trajectory of direction for price action is to the downside, and that's what we're looking for. So we're in a position to to trade accordingly. Like the morning star, how do we enter? Okay, how do we enter? Where's our enter? Well, what we're looking for is when candle 3 completes, then you can sell the market. And it is important that we're looking to complete. Sometimes I see, traders, they get a little bit excited, get a little bit giddy. They're, keen to place a trade. And what happens is they will have seen candle 1 print, they'll have seen candle 2 print, and now they're starting to think, hang on a minute, this could be an evening star. And actually what they see is basically maybe the candle 3 is still printing, it's still working its way through, and they think that basically they should get in early. And I'm here to say that is not really the right way to trade an evening star. You wait till candle 3 completes. When it does, and if it has confirmed that it is a evening star pattern, well then we're able to sell the market. Okay, sell the market at the close. Our stop loss goes above the high of candle 2, above the high of the 3 candles really. And then what we're looking for, as always, is we identify what our trade risk is, which is the difference between our entry and our stop loss. Okay, and let's say that range here was 80 pips, for example. Let's just say it was there. Well, then I'd be looking to see that invariably, we can have the opportunity to at least generate 160 pips. So in that case, in that hypothetical equation, looking to target twice the trade risk. That's what makes for a good, simple trading plan. So, just a couple of examples of that in terms of morning and evening star patterns. And I've tried to show some really good examples. I've also tried to show some scruffy examples, because I do appreciate that it is important to see perfect examples, because it is important for you to know what does good look like. That's unbelievably key. But also, that when you trade markets, the price action isn't always pretty. It isn't always the way we like to see it. So just a couple of examples here, and then we'll look at the live charts to get an idea and understanding. So this is an example of the pound on the pound US dollar on the daily chart. What we see here is that price was moving its way up. We had a strong bullish candle 1. The candle 2, is a rejection candle, even though it closed bullish, we've got a big wick to the upside there, a big wick to the upside. And then it's candle 3, candle 3 is a very strong bearish candle, and part of that strong bearishness is also, about invariably how it closes, how price closes there, in terms of, we don't want massive wicks on candle 3, so we don't want massive down wicks on candle 3. We want to see a strong body. And as I said, it also is looking like it's closing beneath the 50% level of candle 1. That to me is also just a little tip learned through hard experience, of trading star patterns. And then we can see actually price does move, pulls back and moves down there, to give you that 2 to 1 kind of trade opportunity. So that was just an example of the FX sterling dollar daily chart. Just another example here. So this is the Aussie dollar, on the 4-hour chart. As I said, I trade a lot of the FX. That's where my focus is. So there's quite a few examples of them here. And perhaps what you can see here is that price has been sort of trending. It's working its way down. We have candle 1, which is it's clearly a bearish candle. Candle 2, is that rejection candle. It hasn't gapped away, because you're unlikely to see a gap away on an FX pair, and certainly on anything less than a daily, so 4-hour charts and etc. But what we can see is there's a rejection candle there, and then what happens? Candle 3, morning star, candle 3, bosh. That is a very strong bullish candle. And remember my little tip that it also closes, above 50% of the way of candle 1. It's really confirming to me who is taking control of this market. It's confirmed to me that, for whatever reason, the bulls have stepped in, wrestled control of the market, and are driving it north. And that's we want to be able to be in a position to take advantage of that. So that is quite a nice. That's quite a nice example of a morning star pattern there. This is the DAX on the weekly chart here. Okay, as I said, just not all of them look pretty, because that's not always the way markets operate. Okay, it's good to know what good looks like from a good example, but you also have to realize to see that that won't always be the case. Sometimes you just have to work with what you have there to hand. So this is a morning star on the weekly chart here. You can probably see the price has been working its way down. And we had a very strong bearish candle. Okay, and here it's candle two. It hasn't gapped away, but it is how a second candle in a star pattern should look. Namely, it is a very clear either rejection candle or very clear indecision candle. That's a very clear doji indecision candle. And then bosh, what do we get? Candle three. Okay, candle three basically is a strong bullish candle, and remember my little tip, it also closed above 50% of the candle one's body length. Okay, so we have that. What's interesting to note is that actually, for the next week, whilst we buy, okay, once the candle completes, we buy, and on a weekly chart, that means you're buying at the start of the next week, with your stop loss being beneath the sort of the low of 0.2. And it might sort of kind of worry people that in that first week price actually comes down, but in the second week it rises and rallies. Okay, and that's what can happen. That's what can occur for us. Okay, there's it's rare that we have perfect setups where price just basically launches itself. What we have to realize is that on occasion there may well be price pulls back a little bit before it launches itself. In this case, launches itself further north. Okay, on a bullish trajectory. So that's always important to take into account. It's why we have our stop losses in play, and why we should recognize that price never moves in a straight line. Okay, price always moves in a zigzag, and that's just the very nature of markets. And so it's important to understand how that looks and how that plays out for you on charts on a day-to-day basis. And here's just I appreciate that most of my focus is on FX, but I recognize that we have traders in here who will trade indexes, equities, commodities, crypto, etc. We also recognize that, of course, ActivTrades, you now have access to trading more instruments through utilizing TradingView charts, either through ActivTrader or having your account linked to TradingView as well. So here's an example of Microsoft. Okay, Microsoft, this is the weekly chart of Microsoft here. And there's a couple of reasons I wanted to basically sort of showcase this, because there are multiple star formations, all right, and we just wanted to have a chat with you about which ones were the good ones, which ones were perhaps maybe not as helpful to us as we would have hoped or liked. And what we can see here is actually, interestingly, we're going sideways. The price had actually been going sideways in Microsoft, and what we saw is that many traders would say, is an evening star. Okay, those three candles there is an evening star. But then, interestingly, what happens here as we're going sideways is that price actually basically then produces a morning star there. Okay, that's what we look at. There's 1, 2, 3, 1, 2, 3. Now, what we've been saying is that it was around about the 250 level, and price had been mostly going sideways, so not really giving us what we particularly want. What we want to see is a clear reversal. Okay, that's what we're particularly looking for. So even though they are examples, they're the fact that you're getting one in one way after another is just confirming that actually price is just going sideways on consolidation, and that's what it does for 1, 2, 3, 4, for another 4 or 5 weeks after this before it makes a little bit of a move up there, a manipulative move up there. Then what we see is, we can see price kind of drop its way down here, and some people might say, well, Paul, is that not a 1, 2, 3? Is that not a morning star formation there? And once the price does go up a bit, for me, this wouldn't meet my criteria as a morning star. The first candle should be a strong bearish candle. I'd say that's a bit of a high wave candle. Candle 2 should be a small bodied candle, either a rejection candle or a doji, and that candle 2 there, that to me is not a small bodied candle. It's actually quite a big candle. So I would not be looking at that as a morning star formation for myself. And what we do is, we actually can work our way through, and then actually what we do have is a good version of it is that basically here on a Microsoft Corporation, we have what we've got is this candle here. This is a nice morning star formation, and that's what that's one that is particularly pleasing. Price has moved its way down to a level of support. Then we get a very strong. Let me clear these off, just to make it a little bit strong bearish candle, a very small-bodied rejection candle, okay, followed by a good strong bullish candle that also closes above the 50% of candle one, and then we see price rally its way strongly there. Okay, so I said not all star formations are the same. What we want to see is when we're going sideways, star formations are not really what we're particularly looking for. What we want is to see kind of moves that with pullbacks, okay, that gives an opportunity, or that actually the candles do meet the rules, namely candle one for a morning star should be a strong bearish candle. Candle two should be a very small bodied candle, okay, not just not a candle like that particular example there. So hopefully that gives you just a little bit of insight, on there. So I think there's a question there, okay, from here we go, from Paul, okay. So let me just let's have a little read of that question. What ratio of wick to body would you consider a star? In terms of candle two, if we look at this candle here, okay, that is, there's a good downward wick. It's demonstrating a clear rejection, okay. In this candle here, A, the body is bigger than the wick. B, the body is big, okay. We want small bodies, okay. So if we look even here, even though that is the sideways, they are small bodied, okay. If they're small bodied, they might have wicks, okay. It should be clear to the eye. But if you're struggling to work out whether the wick in that particular case is of is it not enough, or is it too much, that in itself should be telling you the kind of the validity of the actual particular setup itself. Certainly for if a candle one's okay like that, okay, if you're looking at that as a candle one, if we look at that is what you're more looking at. Some people might call that a spinning top, some people might call that a high wave candle, some people might call it a doji of a sort. What it's showing is an element of indecision. When you've got lots of wicks to both sides of the candle, that isn't really giving us the kind of the clarity that we want. Okay, what we want is strong bodies. Okay, big strong bodies on there. So, good question there, Paul. Thank you for that. Hope that helps you. Hope that helps you with that. So, before we switch across to the live charts, all right. Just in conclusion, all right. Very often I find that many new traders they overcomplicate their trading life by trying to trade intricate, complicated trading strategies, when actually what they could do is just be better off just following a very simple plan that is more likely to help them more in making progress as a trader. The morning and evening star patterns, they are very simple yet powerful price action reversal patterns. Morning star pattern occurs at the end of a long downtrend. The price action reflects buyers stepping in and taking control of the market. Whereas the evening star pattern occurs at the end of an uptrend, and the price action reflects sellers stepping in and taking control of the market. The bears are in control. The pattern does work across all time frames and all instruments there, okay? As I said, I tend to use it on longer term charts, but you will find that it will show up from 1 minute charts all the way up to 1 month charts, and it will show up across all instruments, whether it be crypto, commodities, fixed income, indices, FX, etc. It will show up across all of them. So, with that, let's take a little look at the live charts and see what's going on as the US markets have just opened for the week, and have a little look at some examples in the live market of some star formations. Before we do that, just a reminder that, of course, we will be back here next Monday, London, 2 o'clock time there, 22nd of January, where we're going to focus on using Fibonacci in our trading. Okay, how can we use Fibonacci? There's lots of variations on a theme and how you can use Fibonacci in your trading decisions. I'll share with you one or two of the very simple ways that I do. Okay, and hopefully that will just help give you a bit of insight into Fibonacci and actually how you can look to trade that. So, as I said, that is next Monday, 2 o'clock London time. If you've not registered, there's a QR code there. You can take a shot and take that on board and come and join us. And we look forward to seeing you there. What we'll do is we'll switch across to the live charts now. So just bear with us a moment while we do that. As always, if you have any questions or comments or feedback that you'd like to provide, well, you can contact us there. You've got the English desk number 0207 6500 567 or email englishdesk@activetrades.com. That might help give you any questions or feedback that you may have. So just bear with me a moment, and what we'll do is we'll switch across to the live charts. Okay. So here we go. So I have this is just my US dollar profile, okay, on one of the ActivTrades platforms. It's just I have a profile for US dollar. So I know it looks quite cluttered because these are working charts for me, so I'm always drawing things on and updating them. So what I have here is I have Aussie dollar here in the top left, Euro dollar, pound against the dollar, dollar against the Swiss franc, dollar index, dollar yen, dollar against the Canadian dollar, and Kiwi dollar here. Okay, so it's just giving me an indication of the dollar against the majors, and so that is always a great starting point when we're looking at trading FX. So let's have a little look at what here is the dollar index on the monthly chart. Now what we are seeing here is this is the monthly chart, what we're looking at, and just to give you just one or two examples here, just from the monthly chart. Many people would look at this here as an evening star formation. So, we had a strong bullish candle. There's a kind of a small bodied second, okay, candle. It's either a reversal candle or indecision, followed by a very strong bearish candle. Now, of course, this is the monthly candle. So these, the ranges are very, very big, okay. So it wouldn't necessarily be saying that, you'd just be trading that off the monthly chart. But what it does do is give us an indication of, the likely direction for the next few months. And so even on the monthly chart, whilst you might not trade it directly off the monthly chart because of the size of the candles, it helps you in terms of determining your bias for the week ahead, or well, in this case, for the months ahead. What I have here also is, some people would happily sort of trade that as a morning star formation. There's a couple of things I would pick up on that. One, the sort of the first candle, I'd like a more of a bearish close now. I want a strong body. The candle two is it's a smaller body candle, and it is a rejection candle. In this case, it rejects. Remember, it's confluence of events. It rejects the big 100 number. And actually, candle three, I would want that to be a more bullish close, and also looking at basically closing above the 50% level of candle one. Okay. Now, of course, what you can see is that actually price did go up for a couple of months, and that's fair enough, but you don't know that at the time, and it's about just working towards identifying these setups and being able to utilize them. Now, what we did have is we had a turnaround here, but then actually what we had was, then we had an evening star here, a strong bullish candle, small bodied second candle that is demonstrating indecision, followed by a strong bearish candle which closed beneath the 50% level of the previous candle. And then you can see what happened there for for the rest of the year. Basically, the dollar fell away. Now we've had a little bit of a pullback since then, but that's fine. Remember, price never moves in a straight line, and that's what we're always looking for. Okay, looking to give us an indication of where is the higher probability move likely to be. And if we can do that, well, that can help us enormously. And interestingly, when we see that kind of evening star formation, because of the very nature of how that's reflected. So, for example, the euro dollar, where we saw that evening star on the dollar index, this, hopefully you can see that was a morning star there, okay, on the euro dollar morning. So we've got a candle 1, strong bearish candle, candle 2, small bodied indecision candle, candle 3, very strong bullish candle. And you can see, closing from where it opened, it pushed its way up to the 50%. And now we'll watch to see whether pull back, before it continues in its move, which would give us, as I said, an indication of, likelihood of dollar weakness, okay, over the next couple of months. That's what we'd be looking at. As I said, even if you're not necessarily trading the actual monthly chart, you can utilize that to give you a bias, and that bias can help you in making your trading decisions. If, for example, say you're in a shorter term swing trade. So, that's what euro dollar did, putting in the morning star there. If we can look and see pound against US dollar, did the same as well. Strong bearish candle down, small bodied indecision candle for candle 2, very strong bullish candle, okay, for candle 3. And so, what we'll be looking to see is this just a reflection that we might be seeing dollar weakness, okay, coming into 2024, and is that just an indication that we can utilize that for our own trading? So that's it's a very nice clear morning star there. And as I said, you see quite a few of them across the sort of particular across the particular time frames. Okay, dollar against Japanese yen. Apologize for my scruffy drawing here and stuff, because it's just a working candle. So there's always drawing elements in here. But if we look at dollar yen on the monthly chart, this was candle 1. This is a small bodied indecision candle 2. And then we get a really strong bullish candle 3, which is also closed above about 50% of the previous candle. Remember what I was saying is we see, the next month, even though you're buying here, basically, let's have a look here. We'll be buying on entry and our stop loss beneath 0.2 if you're trading in the monthly candle. You can see the next month the candle does dip there, okay, and many people might be worried, but actually that's what happens is we dip before actually we move our way up. Remember, price never moves in a straight line, okay? It'll always do a bit of a zigzag. But the important thing is that we could actually see that particular candlestick morning star formation set itself up there. That's the important thing that we were looking at. So and the interesting thing is, and the kind of useful thing is, as I said, these are on monthly charts. So as I said, they come across all time frames and all instruments. And the good thing about when a monthly chart is, you get months to watch it flow out, and watch it build. So you're not having to make kind of, let's say, impulsive decisions. You can just watch and see how it particularly plays out for you over that particular period of time. And that was quite an interesting, quite a particularly useful one there that we saw there. Even the same, dollar against Canadian dollar. Now this one, whilst we've got here, if traders had avoided this because they thought maybe it was going sideways, I wouldn't, I would be comfortable with that. Okay, some traders that have been looking at it like that maybe this was just a very, very, very big, bear flag, okay, on a move. But what you're looking at here is big candle 1, small bodied candle 2. Large bullish candle there. There was a morning star there that for the next couple of months took its way off there. Okay, and so you're looking at that as as it ended into kind of September into the start of basically September. And what we actually saw was basically we had a few weeks up there, okay, running up on the weekly chart, and that's the way we can look at it working in that way. And if we look at the weekly chart here, dollar Canadian, we had a really strong downtrend, and then what finished that strong downtrend? Well, this is a morning star, strong bearish candle, small bodied rejection candle for candle 2, and a very strong bullish candle for candle 3, which also, as I said, is closed above the sort of kind of above the 50% of the candle 1's level as well. So and not surprisingly, we've had a couple of weeks here of where basically dollar has strengthened against the Canadian dollar, and that's what gave us that indication there with the weekly star formation. So hopefully, as I said, you can see that they show up across every time frame, every instrument, and it is just a chance for traders to start to get an idea of what it particularly looks like and how it looks like when we're interested in lower time frames, okay, and instruments. Even though you might be seeing this on a monthly or a weekly, there are ways to be able to trade in line with that when you look at the sort of the ways and the opportunities that it provides for you. So I just look at the morning star that we saw on the weekly chart, well, on a 4-hour chart, you can see that it is already turning around as well. We had a false breakout low here, which became a triple bottom here. Okay, that looked like it was going to also be a morning star, but the third candle just really wasn't strong enough for it, was it? Okay, but as I was saying, if you know that you're expecting price to be bullish, well, then you're in a position to to position yourself accordingly, and that's what we've seen there. We've just basically kind of worked our way up there, being bullish, all off the back of, as I said, being able to sort of just recognize that morning star formation on a higher time frame. And that's, as I said, even if you don't particularly trade monthly and weekly charts, being able to sort of identify and pick up and recognize morning stars and evening stars on those higher time frames can help you in terms of identifying a bias, identifying a trend that you want to trade with on the lower time frames. Okay, so just before we finish, why don't we have a little look at as always, let's have a little look at the US markets to see how they have opened today. What is it that they can tell us? What can we particularly work with? Just looking at interesting what's been going on. Kind of going on there. Let's have a little look at the Dow to see what's actually been occurring there. Okay, so what I'm interested in here is that we sort of said last time that we were waiting for US CPI data to give us a bit of indication of direction, and that has yet to happen. You can see there, actually, the daily chart of the Dow, we're just pretty much going sideways and have done, really for for about 3 weeks. Okay, 3 weeks, maybe 4 weeks, we're getting towards okay in terms of going sideways. So that kind of has an indication of us, that there's not having had that fantastic trend up there for 6 weeks. It's no surprise to find that we plateaued a bit, and the question is it a plateau, all right, before we make our next move up, or is it just losing energy before it rolls over? And the question is that I don't know at the moment. I'm not particularly interested. I'm just waiting to see how that particularly plays out. I'm just aware that is really an area of consolidation. If we look at it on an intraday time, just before we do, my eyes are immediately drawn here whilst we're on it, because to me that is an evening star formation. Prices moved its way up into resistance there. We had a strong bullish move, been in and up move, strong bullish up move. Candle 2 is a small-bodied indecision candle. Candle 3 is a strong bearish candle. So hopefully you can see that evening star formation there, and then price base. This is what the daily chart, and then price did a very nice 2-to-1 and beyond move there. So just once you train your eyes to see these patterns, you'll see them everywhere. But we're just looking at what has that kind of move been looking like there? If I look on the kind of index in time frame, I'm just looking at where have the highs and lows been before the open. It's actually kind of a little bit of I'd say a bit of a damp squib on the open so far. We have of course the markets, are going to be much smaller, okay, in terms of their popularity today, as we have the American holidays, okay, but so it's no surprise that we'll probably just see this continue to sort of maneuver sideways. All right, that's what you'll see on the electronic contract there. That's what'll happen. I think we'll probably stay within the kind of the highs and the lows there. If we look at the Nasdaq as well, what do we want to have a little look at Nasdaq? So, Nasdaq had been once again in a fabulous trend there. People might say, well, actually, Paul, that's there's an evening star formation there. I'd be saying that I prefer candle 1 to be stronger, but certainly this is a small-bodied rejection candle. and we definitely had a strong candle 3 there. I'd just be wondering, I would have liked that to have been candle 1 first. Okay, that's what I'd have been looking at there for myself. But if we just go down to the time frames here, okay, let's just have a look at how we're looking for today. Okay, so yeah, it's a movement this morning, but I think it'll be a quiet afternoon. Okay, yeah, we're looking at that kind of a quiet afternoon there. I think that's what we'll expect on both the electronic contract and everything. Let's have a look at the S&P 500. Bit like the Nasdaq in terms of we didn't have a strong bullish candle there. Okay, yet this one was that's what I'd like to see as candle 1. Then you'd like to see that as candle 2, and then this is candle 3. So it's not a picture perfect one by any particular means. And as you can see, we kind of been a little bit like the Dow. We've kind of mostly just gone sideways there. Now, some people might say, that's a version of a morning star. Once again, this would be a much better candle 1. Okay, this would be a much better candle 1. The candle 2 is a small-bodied indecision candle, and you can see we rallied up strongly from it. No surprise that we kind of moved our way up towards these recent highs. But once again, as I said, we didn't really get much clarity from CPI on Thursday yet, and I don't think we're seeing that anymore today in that terms. And I think, the kind of it'll be a quiet day all around, all right, a quiet day around, and then what will happen is tomorrow will probably be a much bigger, stronger day as those Americans return to the markets, etc. So you can see for yourself, there's a little bit of a on the S&P 500, a little bit of a shove there on the European session of the electronic contract, but then really you can see that is just that's going quiet and will be for the rest of the session there. So not a huge amount to look at there. Whilst those American markets are going to be quiet, we can have a little look at some of the other popular favorite ones. So let's have a little look at things like the gold. Okay, lots of people like to trade on the gold there. Let's have a look at the weekly chart. So in many ways, okay, and just bring the old drawing tool here. What we have here, okay, what we have there is, that is a version of a morning star there. Hopefully you can see, very strong bearish candle. Candle 2 is a smaller bodied, okay, indecision or rejection candle. It certainly rejected that weekly 200 period moving average there, and then a very strong bullish candle there, isn't it? That's what we've seen there. Okay, candle 3 there, and then you can see is we powered up to basically new highs. Okay, highs not seen for many years, etc. Okay, so that was the move that we looked at there, and that's how it's fallen worked its way up there. If I'm looking at that on a kind of, let's say, how is it working at the moment on the daily chart? Yeah, once again, I think this is relevant to the if you're a trader of the US dollars, okay, because invariably, yes, we had some fantastic moves there, okay, on gold, but I think really if you look at 2024 so far, we're in kind of a small kind of range. That's the way I would look at it. All right, we're in a small range there between around about 2020 and 2065. Okay, $40 range, $45 range, and a little bit like the kind of indecision and consolidation on the indices and on the US dollar. We also see a little bit of that on gold as well. All right, so a lot of that will be, personally, I think, it'll get moved when the dollar moves, and then you're looking at, well, what would actually move the dollar? Is it going to be a move in treasuries? And if it is going to be a move in treasuries, that has an impact on both the indexes and the dollar. Well, then what would actually have to happen to do that? There isn't any really major American news this week. Well, there is, but nothing that people will be expecting to cause such a shift. So until we see that, until we see the catalyst for the kind of new direction, the new narrative, the new trend, the idea is to basically manage risk, keep your powder dry, and wait for the good opportunities to arise, because they will. Okay, because they will. Markets are like humans; they surge, then they rest, then they surge again. This is just a rest, and we'll be waiting for our next surge, whether it be back up to those highs or cutting through that 50 and rolling down towards the 219, about 1960. We will, I think we will get something that will basically give us that catalyst. Okay, there you go, ladies and gentlemen. We're out of time there, as they will say. Time flies when you're having fun. I hope that has given you just a little bit of help. I hope that's given you a bit of insight into what star formations are and actually how you can look to trade both morning star and evening star. Very, very simple reversal patterns, and just go through your charts. Just practice picking them up, seeing them, what actually happened, how did they play out once you've watched them, watched them, on the charts. So have yourself a fabulous trading week, ladies and gentlemen, and I hope that you'll join us next Monday, where we'll be talking about utilizing Fibonacci in your trading. Have a great trading week, and I'll speak to you soon. Trade well, everybody. Cheers.